Hey, good morning. It's Monday. I'm going to go over some stuff that I did post some charts already on Sunday, just so you could get an idea of what I was looking at. I didn't do the video because I just wanted to see how the markets opened up on Sunday night, Monday morning. It is now nearly 4 a.m. UK time. So we're seeing the S&P hold up. I'm just going to show you the weekly chart so you can actually see what I'm talking about. Right, as I already kind of showed you on those images. But anyway, look, this is from 2020. That's the sort of COVID crash, if you want to call it that. We then had this ridiculous recovery as free money was thrown around the place. Now, when you take the 23.6% fib from that, from the low back in 2000 and the global financial crisis crash low, which was around 666 in the S&P 2009, March 2009. We get a 23.6% fib at 38.30. So it's a big fib. It's a big longer term fib. And when you take the low from the COVID crash, you get a 38.2% fib at around 38.00, 38.30. Now, why last week was I not saying buy like crazy at this level? Because it's important. For me, I was more concerned at the fact that we'd broken the 100-week moving average, we'd broken that trend line, we'd actually broken this trend line as well. And I thought, with that sort of downside momentum, I don't see this Fibonacci level holding at all. Anyway, it has. You never quite know what's going to hold and what isn't. Obviously, we're oversold on the weekly chart. I'll just have a look at the monthly chart. I don't think there's a moving average there, but let me just check. No, there isn't. We're way away from the moving averages still. So let's go back to the daily chart. The fib level's held. That's a fact. We could bounce back. We closed well above the what could have been a double bottom low. We really bounced back and closed unchanged, which did surprise me, really, because we've broken. I thought the double bottom low signaled that the low was in just above the big fib level. So when it was broken, I thought, oh, that's it. But actually, all we did was go down, test the absolute level, and then recover, closed unchanged. So we've got a pretty bullish candle there. Doji. I can't really argue it's anything more than the doji. You know, it's not a hammer, but still relatively positive. We've got stochastics moving higher, so I think we're getting a bit risk on this week. I think people are prepared to buy stocks. People are prepared to bottom fish a little bit. I think we'll get a recovery. I think we'll struggle. We should struggle around 4,050. We've got fib levels. We've got trend lines. We've got 500-day moving average there. We'll see what happens. Maybe that's it. And maybe we will turn around and break the support level. Obviously, that would show that there is some real weakness in the market. Or maybe we can get a squeeze up through 40.50, and then we can really power up. I look at that later in the week. I'm kind of edging towards a power up, a real good run, get all the shorts out, maybe get up to sort of 4,200, and then, I mean, I couldn't rule out 4,300. That would be a gift. That would be a very strong resistance level, but we'll just have to monitor it as we go. Anyway, I'm sort of leaning towards a decent recovery, maybe as we begin the summer. NASDAQ has been the weaker of the markets. I need to redraw these fibs. So there we go. Take that swing high, take that swing low. Again, not a bad old candle there. Bit of a recovery, not off any particular support level, so I can't show you anything, any good reason. I think probably just going to get dragged up because we were oversold and the S&P could recover. You know, for me, the big support level was around sort of 10,800, 10,500, but we didn't get that low. So I think we will get there eventually, but as I say, maybe this very, very oversold scenario will lead to some gains. 11,700, 11,800, I think I've got as a resistance level to start with. We could get up to 12.5, 12.7. It's certainly possible. Dow Jones held a relatively minor trend line. Let me show you. There we go. Actually, I'm going to redraw these. Right, there we go. We just held a trend line down there. And we've got a mildly, let's say it's a neutral candle, this doji. Not what the bears wanted to see, put it that way. The bears wanted us to see at the close of the week, close at the low of the week or the low of the day. Didn't happen. Bounced back, closed unchanged. So you know, relatively positive. Again, no huge support level on the weekly chart. So I think this is just going to be a bounce and a bear trend. Come on, why can't I get this weekly chart up? Here we go. This would have been the big support level down at 29,700, 29,600. So maybe we can get back up to, who knows, 32.4, 32.5. It's certainly possible. That's only about 100, that's about 1,000 points higher. I could see that. I think that's a reasonable target. 3200, 32,200 on the daily chart looks like the resistance level. So anyway, the low 32,000 area could be where we're going in the Dow Jones. That's not that far away, and then we'll see if that is a big resistance level, and if the market then turns around. Gold still holding that 1850, 1855 area, so that's a real strong resistance level. I've got a feeling that could break up too. We kind of got a risk on environment, which will probably help gold. So maybe that won't hold this week. Silver, 2180, 2200. That was the big resistance level that has been holding again. The Forex markets are real tricky. Japanese yen's the only thing that's really behaving itself. Again, testing that support level this morning. We've been down to 127.13, so we're bang on the support level. We could recover. I'm wondering if we're building a right shoulder to a head and shoulders pattern, but we'll have a look at that later on in the week if it does happen. I'm not going to comment too much on the currency markets because they're just very confusing. There could be an inverse head and shoulders pattern in the euro. Looking at that, there we go. We could have just built the right shoulder. Maybe we would need to build the right shoulder. We'd need to dip and break up again. That isn't quite the right, big enough for a right shoulder. But I'm keeping an eye on it. I'll alert you if I think that actually forms. I don't think there's anything else we need to talk about. Bitcoin, well, you know, that resistance level at 3,700, 3,800 holding beautifully. So I think that there is further downside in crypto. Yeah, that's it. That's all I can say really. The Forex markets are just really choppy and tricky. But again, dollar index. Let's look at that. Now the dollar could start to weaken. I'm wondering if this is a head and shoulders pattern too. Now we're hitting a big support level. So we could bounce, we should bounce. And maybe this will form a right shoulder. Again, I'm jumping the gun by a long way. We'll have to monitor the situation. We don't have anything like a right shoulder yet, so I'm speculating. But we have hit a big support level at around 102.80, 102.60. If that holds, we'll get the bounce. It just depends on how far the bounce goes. Do we get a head and shoulders? Do we get a double top? We've definitely unwound that overbought situation. So a bounce in the dollar would not be surprising. We will see if other currencies weaken against the US dollar. Obviously, that would help the gold short position as well. Okay, I hope that all makes sense. If not, give me a shout and I'll explain some more. Chat tomorrow.